Joining us now exclusively, Adobe CEO Shantanu Narayan. Shantanu, you're not rolling this out to make dragons outside convenience stores in Photoshop. This is more about erasing things out of image, doing simpler fills, more basic things that Photoshop can do using AI to speed up the process for artists as you start to roll this into your core products, right?
Well, John, as you said, it really is a watershed moment for, I think, the future of Creative Cloud. We've had this vision of unleashing creativity for all. And a lot of conversation has happened about generative AI and how generative AI can accelerate the creative process. But that's not adequate. And what you really need is a product like Photoshop, where you can integrate generative AI into what you're trying to edit. And so when we showed what we have done with integration into Photoshop with Firefly, I mean, people's jaws just drop because it now finally is that co-pilot, the creative co-pilot that allows somebody who's creative to verbalize what they want to do, bring it into Photoshop, and then Photoshop does its magic as it relates to precision. So I think it's a watershed moment for us, and it's just really exciting to see how we're accelerating innovation in this exciting new space.
So, Shantanu, we always try to look out for investors as well, and so let's talk about potential financial impacts of this. Do you expect this to grow the number of users who can get financial benefit out of a Creative Cloud subscription? So do you expect more market opportunity for Creative Cloud out of this primarily, or is this mainly going to make existing subscribers more productive, lower churn, and increase margins that way?
The two words that I think of, John, when I think about what the potential of generative AI is within our applications is both accelerant, which is what you referred to, making the current creative professional so much more productive. And therefore, if they're more productive, they can take on more tasks and therefore make more money. But I also think of it as being accessible. And that, I think, is the holy grail. I mean, for us, making our products more accessible because everybody has this story to tell, we think there are 1 billion people who wish to express themselves. And what we have done with Firefly, what we are doing with Express, the partnerships that we've announced with companies like Google, really is going to bring creativity to all. And so I do think it's both accessible, but it's also accelerant.
Now, lay out for me what Adobe is doing with AI, because there's more to it than generative, right? We've talked in the past about Adobe Sensei. People who are using Adobe Premiere know that you can auto-generate transcripts and captioning. You rolled that out, I think, about a year ago. It's enormously useful for people who work with video a lot, as I personally know. But what are the buckets that you put this AI R&D into, and how are you thinking about how they're going to add value in terms of revenue to the suite going forward?
It's a great question, John. And as you point out, we have been investing in Adobe Sensei, which allows you to do so much magic. I mean, things like when you are in a video production process, as you mentioned, and you've edited one frame and you want that editing of the one frame to then extend into the entire video. Our artificial intelligence technology, Adobe Sensei, allows you to make that happen across every single frame without you having to manually do it, saving you hours in the process. As it relates to generative AI specifically, I would say there are 3 layers to that, John. I mean, there's the data layer, and Adobe is so differentiated in that we have so much data. And we've also taken a very differentiated approach in terms of training our models with data that we have commercial license for. The second layer to generative AI is about these foundation models. And there are very few companies on the planet, Adobe is certainly one of them, that can invest in a foundational model for imaging. And so we've done that. You can expect to see us do the same for vector and animation and 3D and video. And then there's the interface layer, which is how are people going to then access it, and how does that magic become usable for folks? So when we think about AI, and specifically generative AI, I think it's the combination that Adobe has the data, We have the models, and we've invested in these core foundation models. And then the surfaces that people can use, the interfaces, whether that's Illustrator or Photoshop or Premiere, that's where the magic comes to life for a customer. And the generative AI is specifically called Firefly. All the umbrella technology that we've developed is called Adobe Sensei.
Hi, this is Cayden from VIA Value Investing Academy. Now, thanks for joining another evening of our deep dive series. And tonight we're going to talk about this company called Adobe. Now, before I start, I just want to make sure that you are able to hear me and see my slide. Let me just put my slide into the projection mode. Yeah. Oh, my screen sharing is stopped. It's okay. Just give me a second, right? Let me just pull up my slides again. Maybe just test to make sure that my voice is okay. Wait, now, if I'm able to hear my voice, right, is it okay just type 1 so that I know you can hear my voice? My slide is up. Let me put it into full mode. Full mode. Oh, today my PowerPoint is like not listening to me, right? Just give me a second. Let me put this up. Okay, let me just do it one more time. Yeah, it should be in full mode right now. Okay, good. Yep, so if you're able to, again, Angeline said 1, so it's okay. Okay, so let's get started. Before I start, I just want to give credit to CNBC Television, who has, provide us with the content so that we can share this content. And of course, the next one, I would like to also thank Adobe for creating such amazing software, right? And right now they call it Adobe Firefly. In the early days, I've used Adobe before, very simple one, the Adobe Illustrator, right? But that was like more than 10 years ago. And I mean, since then, 10 years plus until right now, just a short 10 years, technology has bloomed so much. And before this session, I was just having a chat with my colleague, Irfan, right? I was just telling him that, just before the .com, and that was in probably year 2000, 2000, and then I attended some class where we're supposed to design website, and we have to hard code the language, right, called HTML. Hypertext markup language. I think I still remember all this, and I still remember there were 2 software that are available, right? One is called Dreamweaver. Now, if you know this software, right, you belong to my generation. I don't think anyone is doing this anymore. Then the competitor one is from Microsoft, and it's called Microsoft Front Page. By the way, anybody in the audience have used this Front Page or Dreamweaver before, or at least heard about it? If you have, maybe you type Y, right? Yes, that means you belong to my generation. And that was like 20 years ago. But today is different. Today, website design is all drag and drop. And then with the advancement of technology called AI, it's really amazing. I think it's beyond words. And if you look at this text over here, right, as the video has described by Adobe, you can just type in whatever things that you want, and then you will produce the image that you want, and then you can insert in the picture. And of course, just now my colleague also showed me one picture where he went overseas, and then he showed me one where it's before editing, where he was crowded by a lot of people, and the other one where all the people went missing. So he used Adobe. Okay, Yeah, Adobe, So before I start, I just want to let you know that all the recordings that you are watching right now, right, you can revisit at this website called youtube.com/Value Investing Academy. So for example, if you want to watch live, you just go to this website, youtube.com/Value Investing Academy, and then you scroll down the page until you see this segment, right, which is VIA Deep Dive Series, which is what this evening is all about. And then because there are many videos, you need to click on Play All. So once you click on this part, and then you need to go to the right side. So there are many videos, And if you select this, video, for example, Value Investing Academy Online Symposium, if you click on this, you can see some of our speakers over here. And then on this symposium, we also shared 4 companies. This lady here, she has really left us, Reina, but she has previously shared NVIDIA. And this is also recently a hot stock. So if you want to know what are the things that's happening really hot, really trending, you can always go to this VIA Deep Dive series. You can pick anyone. Yeah, pick anyone. I think the recent one that we talked about was, like for example, Cathy Wood, again, betting on AI, ChatGPT, and so on. Yeah, please feel free to visit. So remember, it's www.youtube.com/value investing academy. So right now, let's go into our topic, which is Adobe, right? Before I hand over to Hillary, maybe I just read out the disclaimer as usual. So remember, the purpose of this evening case study is solely to illustrate the application of value investing methodologies and various valuation method in the context of real-life companies, in this case, Adobe. So remember, under no circumstances does any of the information provided in tonight's case study represent a recommendation to buy, sell, or hold any stock. So remember, we do not take into account your individual characteristic profile or risk appetite of a given investor. So remember, in no event shall VIA or me and Hillary be liable to any viewers, guests, or third party for any damages of any kind arising out of the use of any content shared here. So remember, my company, My Cayden Investments, VIA, nor me and Hillary are not operated or affiliated with any broker, dealer, of licensed financial advisor. What a mouthful. So I'm going to hand over to Hillary right now so that she can really go deep dive into the case study tonight called Adobe. Yeah, here it goes to Hillary.
Hi, good evening everyone. Welcome back to our another deep dive series, and for tonight we'll be looking into Adobe. So why Adobe? Since last week we actually explored about two software companies. One is Unity Software and the other is Autodesk. So why this week again Adobe? Because my colleague Irfan actually shared with me that Adobe is releasing their earnings result on 15 June, which I find that maybe something interesting, which is really, it is interesting. So you see here, the news that they released is that the stock actually rises after their stellar Q2 result. So how phenomenal is the result? Let's find out. So here, the analysts estimate their sales, which is also their revenue, to be 4.78 billion for that quarter. But Adobe managed to generate about 4.82 billion of sales for that quarter. So this is a good point for us because the revenue that they generated is increasing. That means there are more people are using their products, buying their products. And then next, EPS, earnings per share. So here, earnings per share, in short, it means that for every share that an investor purchased, how much of the earnings can the company generate? And here, the analysts estimate that for every share, the company is managed to generate about $3.79. So the result they actually released for the Q2 is actually 3.91. So it's also another increment compared to their analyst estimate. So with that, all these two good news, Adobe share price actually increased. So what caused the share price to cause these results to generate to be much better than the estimate is because they actually incorporate the generative AI into their products, which you have seen over the video that was being shown earlier just now. So some of the products that has been incorporated with AI features are these: Acrobat, Photoshop, and also Premiere Pro. Premiere Pro is mainly used for videos editing. And other than that, there's also Firefly, which we will also explore in tonight's deep dive series. So with that, let's look at the quick background or the circle of competitors of this company. So here is the quick background about the company. So when people mention Adobe, first thing that will come to their mind is maybe creative software. But for me, Adobe actually is more on Adobe Acrobat, which is for the PDF usage, rather than Photoshop or maybe video editing. So they actually specialize in creating products for creative software solutions, which are used in all these creative work, which is graphic design, photography, video editing as such. So their customer base are mainly creative professionals or individuals where they will use all this software to create these amazing graphics or videos. So the company is actually founded in 1982, and currently it's located in the US, California to be exact. And they actually launched their IPO since 1986, which is quite a long time ago. So their ticker symbol is ADBE. So this is a quick background about Adobe in case that you just only know that, oh, it's only Photoshop or maybe PDF. Okay, so now we will look at what are the products or software solutions that they actually offered. So while I was doing research, they actually categorized their software solutions into 3 main parts. So the first one is Creative Cloud, which allows the creative professionals to create amazing illustrations or graphics. And then the next one, which is something that most of the people are more familiar with, which is the Document Cloud, Adobe Acrobat. And finally, which is something that all of us are not very familiar with about Adobe, is their Experience Cloud. So this one actually helps to power digital businesses. So what does this actually mean? We will further explore in the next few slides. Okay, so for their Creative Clouds, their products, there's a lot of products, but I managed to shrink it down to show that their products are used in which part or which of the creative work. So the first thing is about photo editing. So sometimes when we take photo, the photo might not look nice, but after you adjust the lightings, the noise on the photo, then it will look much better. Or maybe you can even add in some other graphics onto the photo to look much better. And also video editing and graphic design, and also illustration where they can actually draw. So before all this, people have we have to look for graphic designers to create certain graphics for us. But with this, we'll be able to do it on our own. So how they are able to do it on their own, which is come to this Adobe Express. So this Adobe Express is actually a template where they can drag and drop and create certain posts on it to load it up onto the social media. So even though I try to describe as much as possible how this actually works, later we will show you a quick video about how does Adobe Express able to help people to generate much more interesting social posts by their own, by just dragging and drop, and also using the generative AI to create the image that they want. So with that, my colleague will play a quick short video that is nicely done by Adobe. So please enjoy the video.
Welcome to the future. Let's get it. Won't stop, we just beginning. Came here one goal to win it. Fight on right to the finish. Let's go, we on it. Toss people, power running. All eyes on us, just watch. Bet you can't guess what's coming next. Get ready, away. We on that next level. We up on that next. Up on that next. We up on that next. On that next level. Pedal to the metal. Get ready, away. We on that next level.
Hi, welcome back. I hope you have enjoyed the video that is being professionally done by Adobe. So you can actually see that you just use a list of all templates and then you can adjust accordingly. Because last time when we try to create something graphic, we have to use their existing template, but there's not much things where we can try to customize. But from this video, we can see that we can easily change the background, we can add in additional things, and also change the wordings to become much more attractive. So with that, people can easily use this software to create the social post that they want rather than doing the graphic from scratch, which most of us are not very artistic enough. Okay, so other than Creative Cloud, let's look into Document Cloud, where you can turn manual documents into digital documents. So for this is much more familiar for me because we will usually use PDF to read certain software documents, like maybe lecture notes or maybe some e-books. And for under this Document Cloud, they actually have 2 main products. The first one is Adobe Acrobat, which most of us are much more familiar with, which is the PDF. So with this cloud, they can actually share these documents from any platform that they want with anyone. And then another thing, interestingly, is that there's also an Acrobat sign. So with this one, you can actually put in your e-signature onto the PDF itself. Because last time, if we were to sign a document that was being sent to us via email, we have to either print it out or maybe just type in certain characters into the document to say that, okay, I've signed it. But here with this technology, they can actually sign on, you can see here, click here to sign. That means click here, and then if it's a touch screen, you can easily sign on it, and then it will appear here to show that you actually signed onto these digital documents instead of printing out the document hardware, scan it back again to send it out. So this can actually speed up any application process. So for this, these are the two main products under Document Cloud. And then for now, the Experience Cloud. So here, Experience Cloud, they are actually offer a type of business solutions or digital experience tools. So in short, it actually helps the businesses to transform the customer's data, which is here, the complex data, into a much more personalized customer profiles to deliver the information that they really want. Okay, so this cloud actually combines with Adobe Sensei to speed up the process. So how does this actually work? So in the first place, they will be able to gather information to see that what does the customer are interested in. So here is an example that maybe the person is interested to go on travel, then they will search online to find out more. So here they'll be able to gather the data accordingly. And from there, they are able to generate the content. That means they will be able to create the content from scratch until they deliver the relative personalized content to the customers. Then here, under content management, they'll be able to store or organize the data accordingly. And then they are able to store the customer's journeys. That means they're able to gather all of their data and then to see what they like or what they don't like. And from there, they are able to personalize all these information to send it to the customers across many channels, such as social media, or maybe on the web, or via email to the customer within milliseconds. So this is actually what Experience Cloud it is. Because if we are to send certain marketing campaigns or social media posts, sometimes people will just create it and then send it out to see how it actually works. So from here, they're actually able to gather the data to see what they want. Then they can actually customize to send personalized messages or relevant advertisements to the customers. So this is something that most of the businesses are interested in. Okay, so now let's look at how does Adobe actually generate their revenue. So this one, based on last year's annual report, they generated about 17.6 billion of US dollars. So this is their business segment. So you can see here they separate into three types: digital media, digital experience, publishing, and advertising. So digital media is actually comprised of two main parts, which is Creative Cloud and also Document Cloud. And Experience Cloud is actually under digital experience. So this is where they actually generate their revenue from. So we can see that most of the revenue actually generated from these two main product solutions. Then followed by Experience Cloud. Okay, in terms of region area, US generated more than half of the revenue in 2022. Then followed by Europe, Middle East and Africa, Asia Pacific, and also other parts of the America region, which is maybe the Southern America. Okay, so now here's what we are interested in. So what are the future plans that Adobe has? Since we know that Adobe already showed us their prowess in their generative AI incorporated into their products. So what else do they have? So here, let's look at what are the generative AI tools that they are currently releasing. So of course, it's the Firefly, which is the AI who help them to generate really good images, and also photoshopping images with the generative fill, which you already see how they did in the video. And also, we will also look into Adobe Sensei Gen AI. Okay, so this is what of the AI technology that the company has at the moment, which is Adobe Sensei, Adobe Firefly, and also Adobe Sensei Gen AI. So for tonight, we will look into this Adobe Firefly, which is mainly about Creative Cloud, and also Adobe Sensei Generative AI, because this one is mainly used in the Experience Cloud side. Okay, so for Adobe Firefly, you can see that you just type in the image that you want, and then they are able easily to create the image that you want. So you have seen it in the first video and also in Adobe Express. So here it's actually a very high quality content which they can generate easily in a fast, within milliseconds. And you can actually customize, because last time if we want certain images, we have to go online to find on the public domain such as Google to see that whether does this image suits what we want, and then we try to adjust accordingly I still remember there's one time I wanted to have an image where there's a robot and then there's information transferring in, but I had no idea how to edit it, so I have to ask my colleague to say that how is this going to be done, because if I copy and paste, then the color does not matches, which is quite troublesome. So here you can easily type in that what do you want, and then they will generate the image accordingly. And also, this one is easily used by anyone, because for me, I'm not a very artistic person. I find it very hard for me to draw, so it's unlikely I can create all these amazing images. But with this technology, I just type in says that, or maybe an astronaut on the moon with the rocket at the background, so that maybe they can generate an image something like this, which is something that I want. And also, all these images actually are being created from Adobe stock. That means they have a whole library or a whole archive of images, so there's no worry about copyright. And also, they also gather some images from the public domain where the copyright has already expired. So with that, people won't be afraid that they will get sued because they are infringing on their copyright. Okay, so now here's the generative fill. So generative fill actually speeds up the process when you do photoshopping, because like earlier when there's a bicycle and then there's also like those skidding marks, it's going to be a hassle for people to edit and then try to remove the mark. But with generative AI, it actually speeds up the process. How so? So you can see that here in this image, it is before being edited. So you can see that actually the sky view is very, very beautiful, but it's just that there's this tower, the tower here is obstructing the view. So if we are to remove this tower, we have to remove it, but then the background, there will be like some missing parts. So we have to like use the color to adjust accordingly to fill up it. But you can easily see that it's actually being edited. But with generative fill, you just type in that you wanted to remove this tower, this radio tower. So you can see after it's being removed, you can see this, the sky view is very beautiful. But maybe you wanted to do something much more futuristic. You just type in says that, oh, maybe I wanted to put in a robotic into the sky view. Then it will appear something like this. So imagine that if we are to create some image like this, we can easily find a photo or graphic from online, then we try to paste on it. But the problem is when we paste on it, the graphic itself, they have some background. So if you are to try to change the background, it's going to be looking a bit more not so perfect. So, but with generative fill, they can easily crop in this robot into the background, into the graphic to look much more realistic. So this is how generative fill actually looks. Okay, so now let's look at Adobe Sensei Gen AI. So what is the difference between Adobe Sensei and also Adobe Gen AI? So here, Gen AI is actually generative AI. So this one is actually Adobe's latest AI technology to help them, especially the marketing team, to create much more creative content to deliver a better customer experience. So here, actually how it works. They can actually gather all of the data insights, and then they can actually try to spot the trend that what does the customer like. And with that, they can help them to uncover engagement opportunities where they can create much more customized marketing campaigns, social media promo, and also corporate presentations. So this one is mainly used in the Experience Cloud. So how does this being used in the real world? So this brings us to our next point, is where IBM decided to expand their current existing partnership with Adobe. They are using this to help them to create their content supply chain, which is to help them to create much more better content to deliver to their customers. Okay, so here's the news that they announced to expand their partnership. So here they actually cooperate with Adobe to deliver a much more personalized experience online. So what are their past collaborations, which is this Adobe Workfront? So this one is actually a technology to help them to better manage their work. And here, it's quite hard for me to describe how this actually works. So I'll have my colleague to play another video to show you how this Adobe Workfront works along with Adobe Sensei Gen AI. So please enjoy another video.
Say I'm a marketer at an online travel agency. I've been tasked with growing bookings by 30%. People want to truly connect to the destinations they've been dreaming of. an integrated social and digital campaign promoting our package deals as workations might work well. I've got to get buy-in from executive leadership. So I compare a few different what-if scenarios in Workfront to make sure budget, resources, and project plans sync with strategy. Insights show we can increase bookings by 30% while staying on budget and cutting down on resource conflicts if we put 10 more people on the project. I get the thumbs up and can assign the right people to the right tasks using defined templates. All team members have eyes on the project from start to finish, so there's no getting bogged down in the messy middle. We're all connected to the what, how, why, and the when. And we can see that our work matters. Content creation goes off without a hitch because creative work happens and stays in creative tools. We add comments and updates to Workfront tasks directly from Creative Cloud. But asset creation is just the start. Because Workfront integrates with Adobe Experience Manager, we can store, auto-tag, and publish our content with ease. In fact, we can feed it right into Marketo Engage to activate an email nurture program that delivers the workation offer to our target audience segments. Adobe Analytics funnels insights into Workfront in real time, so I can see how many bookings we've captured. I can also see how each of the campaign assets perform, what's working, what's not, and how we can improve. I'm happy to report the Workation campaign was a huge success. We exceeded our 30% booking goal. To celebrate, I'm off to enjoy a workation of my own. I think Maui is calling my name this time, because with Workfront, work flows from anywhere.
Hi, welcome back. I hope you have enjoyed this video. This video is actually done by Adobe to showcase how Adobe Workfront actually helps the corporate to work much more better, much more efficient together with the team. Because right now, they will try to create content for their marketing campaign, to sell their products to their customers, to let them know that what they have. But in order to do that, they need to have a certain software for them to create the content. And this is where Adobe actually steps in. And with Adobe Sensei Generative AI, Gen AI being launched, this actually helps the corporate to turn their ideas into content with the help of generative AI. So right now, let's look at when IBM expand their partnerships with Adobe, what are the outcomes? So this is the previous collaboration with Adobe Workfront, which is mainly to help the corporate to effectively plan, streamline the process so that they can work much more efficiently. And also, they also help to keep track of the progress to make sure that everything is done on time. And now they further expand this partnership to include generative AI to help with their marketing. So here, Adobe has Adobe Sensei Gen AI and also Firefly to help them to create the content. Whereas IBM itself, they have their own consulting team of experts, which is about 21,000 of experienced data and AI consultants. So when they work hand in hand together, they're able to deliver a much more personalized customer experience across multi-channels, such as social medias, on the web, as such. So this one can digitally reinvent the customer interactions, because last time for advertising, they have to create a marketing campaign, then they send it out to see whether does it work or not. Then from then they gather feedback. But here they're able to gather the data, and then from then they can create the campaign accordingly, which is much more personalized to the customers. And also, they are able to assist the clients to implement this Gen AI model much more faster in the design and creative process when both of these companies work together. So this is the benefits when IBM expand the partnership with Adobe. Okay, so next, another future plan that they have on track, which is they are planning to acquire this Figma. So acquire, it actually means that Adobe is buying this company called Figma. So Figma is actually a cloud-based collaborative designer platform. So here, let's have a quick look about the background so that we understand what Figma really is. So Figma is actually a private company that provides web first. That means everything that are being done, the design is being done, is actually done on the web, not on its software. So here, there are a lot of people, a lot of players that can actually collaborate together on the web via cloud-based. So here, they can actually streamline the design process on a real-time basis. That means on the web, they can actually immediately work together to design it. So this is actually widely used by user experience user interface designers, product designers. As you can see here on the web, they can actually work together, drag and drop the design and work accordingly. So here, they actually provide a lot of design tools to make this work. So here are some of the things is that to provide a user interface, because sometimes when we go onto the website, there are certain interface that looks attracting, but there are also some interface that looks very, very boring as such. Okay, so now here's the million-dollar question. Why is Adobe actually acquiring Figma? Because from what we see, Adobe itself is actually a very large corporation where they have their own amazing technologies. But why do they still want to acquire Figma? Because they wanted to integrate this company into their creative cloud products. So here, Figma is actually one of the best web-based collaborative design platform. So by acquiring this Figma, Adobe is actually able to expand their cloud-based design capabilities. So everyone can easily design on the web and then collaborate together real time. Here, they wanted to have a new era of collaborative creativity, because when they can easily collaborate real time on the web, everything can be speed up. Imagine that everyone has to design everything on the software, then they have to upload the graphic onto the cloud, then the other person has to access to the cloud. It will take time, because for one to create a graphic, sometimes the graphic size might be quite huge, and when they are to upload onto the cloud, it's going to take time. But if they can immediately design on the web, everything can be done in a much more faster manner. And also, they can actually have a much more expanded user base, because for Adobe, the user base that they mainly have are creative personnel. But for Figma, the users are mainly for the user experience, user interface designers, and also product designers as such. So there will be a lot more people using the product. When there's a lot more people using the product, then Adobe sales will also increase. Okay, so now this is the latest update on the deal, whether will Adobe able to purchase this company. So here actually, in order for Adobe to purchase the company, they will need to have the shareholders to agree that, okay, they can buy this company. And also they need to have the approval from the regulatory to say that this deal is okay, you can purchase it. But unfortunately, they are actually having some hurdles from the European Union. So here, European Union authorities are having a much more detailed investigation to see that whether this deal is okay to be purchased by Adobe. Because once Adobe purchase this deal, it might cause certain kind of monopoly, and then to make it become less, that means less competitors to compete within the market. So if Adobe is going to be monopolizing this area, then they can set their own pricing and make it much more expensive for the users to use. So this is one of the reasons why the EU regulators decided to have a detailed investigation into this deal. So this may take more months and may ultimately derail the deal, even though when Adobe work together with Figma, everything looks nice. So if the deal does not go through, it means that Adobe cannot purchase Figma. Okay, so now let's look at the numbers. So here for Adobe, their revenue since 2013, the revenue has been increasing year on year, which is something that is very good. And this is their latest quarter result. So we can see that for their quarter revenue, is also slowly increasing quarter by quarter. And next, we will also look at their earnings per share. So this is their earnings per share since 2013 until 2022. So this is the definition of earnings per share. And here we can see that it's actually an increasing and uptrend. So here, it actually means that for every one share that the investor purchased, Adobe is actually able to generate about $10.13 of their earnings based on this 2022 result. And here is their quarterly result. So from here, we can see that for their quarterly result is also increasing quarter by quarter. And this one is their latest EPS for Q2. And now we will also look at their cash flow. So the first cash flow that we will look at is their operating cash flow. So operating cash flow means that the cash flow that is being generated from their normal business activities, whether does the business able to bring in cash flow. So if it's a positive, that means the business or the activity is able to bring in cash flow to the company. But if it's negative, that means the company is actually losing money or bleeding money to keep the operation running. And here we will also look at their latest quarter result. So from here, we will also see that even though there's been ups and downs, but we can see that their latest Q2 is actually higher compared to their Q1 result, which explains the reason why the share price of Adobe has been increasing. And next, we will also look into their free cash flow. So if you have watched our previous video, we have actually shared that for software companies or tech companies where they don't have any tangible assets, free cash flow is also another metrics that we can actually have a quick screening to see that whether is the company working good or not. So the difference between operating cash flow and free cash flow is that for free cash flow, it means that the cash that the company has after they have minus off their capital expenditure. So capital expenditure here is actually the expenses that the company has used to purchase assets such as machineries or maybe some assets that can help them to generate more money that will last more than 12 months. Okay. So here, both operating cash flow and free cash flow is in a positive and upward trend. And based on their quarter result, we can also see that even though there's also ups and downs, but compared to Q1, their Q2 free cash flow is actually quite higher compared to their Q1. And if the company has much more free cash flow, they can actually use that free cash flow to reinvest into the company to further grow the company or even give out dividends to their shareholders. So if the free cash flow is in a positive upward trend, it's actually a good sign that the company is able to generate cash flow. Okay, so next we will also wanted to know how is the debt situation of the company. So with that, we will look into the debt to equity ratio. So here is the chart for their debt to equity ratio. And based on value investing methodology, we wanted to see that this ratio is less than 0.5. So in layman terms, it means that for every $100 that the company has, the company cannot borrow more than $50 off the debt. And here is the 0.5 line. So we can see that since 2013 until 2022, the company has not exceeded 0.5, which is a good thing. And the latest debt to equity ratio is 0.29. So this one is actually considered a good thing based on the value investing methodology. And for their quarter result, we also see that every quarter since May 2022 is actually below 0.5, which is also another good thing. So overall, we can see that actually Adobe is actually quite financially sound. Okay, so to conclude all for tonight's deep dive series, this is what the pros and cons about the company has. So the company is going to be is going to lead for the next generative AI era. And they actually expanded their partnership with IBM, which is already in the news. And we have seen the potential when they cooperate with IBM. And also, from all the numbers that we've seen, the company actually shows quite strong financial fundamentals for now screening. But even though they are showing very strong fundamentals, it's not a sign to say that now is the time to buy. There's also further investigation required, which Cayden will share later. And for cons itself, for me, I find it a bit hard to find out the cons because with all these good notes. But there's something that investors should take note is that if the Figma deal does not go through, it will also affect Adobe's share price as well. And even though the products that Adobe shows is very attractive, if the competitor is able to offer a much more attractive products with their lower prices, then this will also affect their revenue. So with that, these are all the points that I have for the Adobe for tonight, and I hope you enjoyed tonight's deep dive series. And with that, I'll pass back the baton back to Cayden. Thank you, everyone.
Hi, ladies and gentlemen, this is Cayden here. Welcome back. So before we start, let me just do a quick recap of what Hilary has just described to you. So just make sure that the slide is up. Slide is up, right? Okay, good. Now, if you look at the screen over here, you can clearly see where Adobe's money come from. The first one is digital media, takes up about 70%, and Hillary has already described that the breakdown of this digital media consists of this creative cloud as well as the document cloud. So this takes up about 70%, and then the next chunk, right, comes from this digital experience cloud, 25. Now, in case you miss out the very beginning part because you just joined in, it's okay. Once this session is over, remember it's auto-recorded in the YouTube Live. You can always scroll the bar at the bottom, scroll all the way to the front where Hillary talks about, in detail what's the Creative Cloud, Document Cloud, and Experience Cloud. Now, if you are a non-technical person like me, if you just look at the term, you may not understand. So remember, the first key, right, in investing is not to, this very impressive, this AI, whatever term that's being tossed into it, is do you understand? This is the very important word. It's a very simple and very important word. So in other words, after today's session, if you have no idea what we're talking about, that means you do not understand, which is okay. You do not understand, right? So imagine that if you do not understand something, and then suddenly tonight, maybe you toss out 20K and then you buy Adobe stock. Oh, this is as good as gambling. Yeah. So you only do things that you are familiar, that you understand. So the first thing is, do you understand this front part? And then here, you can see some financial terms, and so on. Now, in other words, if all these terms look very alien to you, right, again, I think you do not understand. Yeah, you do not understand, So this is what Adobe does for a living. So if you take whatever revenue they have from the left side and then deduct all the necessary expenses, you end up something called a profit or loss. If this number is a positive, it's a profit. If this number is negative, it's a loss. And sometimes profit and loss is also known as the net income. Now, if you look at this term, 4.8 billion, it seems like a big deal. But the key thing is the percentage over here. Yeah, percentage over here. And then you cannot see 1 year's percentage. You want to see over the years the percentage has gone up. But just by looking at this number, actually, the percentage is quite higher. Usually for a business, rarely a net margin is so high. But again, understandable because this is a software business. So if, for example, it's Sheng Siong maybe 3% to 5%. So this 27% margin is really very high. So this is a quick overview of what Hillary has said. So let's assume that the Adobe passes all the tests. You check off, okay, revenue pass, net income pass, operating cash flow, it pass all the tests. So at the end of the day, and let's assume that you also understand. So at the end of the day, you want to make money. Yeah. So if you want to make money, give a guess. What kind of price do you want to buy, right, this business? Do you buy at a high price so that you want to make money, or do you want to buy at a low price that you want to make money? So obviously, you want to buy as low as you want. So for example, if you walk into, let's say, Foot Locker stores, right, and then you want to buy a pair of shoes, and then you saw this beautiful shoe, the latest one, wouldn't it be nice if you can buy that nice pair of shoes at a discount, so that you win, right? So they win. So same thing for a business, same thing for a stock. You want to buy at a low price. But low is so subjective, right? Yeah, low is so subjective. Yeah, what is low? But before we talk about low, let me just share with you what is happening. Now, this blue line over here, that's on top, is the earnings per share, without NRI. NRI is a non-recurring item. So in other words, anything that's one-off, the data, right, is being removed. Yeah, so the line looks smoother. So you can see, right, in the long run, when the company do well in terms of EPS, the share price will follow. So you can see these two lines, right? These two lines correlate. Okay, it's going up, the price will going up. So sometimes once in a while there was some hiccup, right? Because there's some bad news or whatever. So temporarily the share price will go down, but eventually it will still converge back to here. Okay, so the first philosophy is very important. When a company do well, the price will do well. If the company do badly, right, the price will do badly. So let's come over here. But in between, do you notice from here to here, do you realize that the value of the company is doing well? EPS is doing well, but can you see here? This gray bar over here is actually the COVID. So for some strange reason, when there's a COVID, the price goes down. So now it's the store, right? They're selling Adobe. Suddenly put a price tag at a discount. Very strange, Interesting, right? Yep. So here how the price go down, but the value is still going up, right? So the value continue to go up. So Mr. Market realized that, hey, I was wrong. Yep. So again, they go back, they converge. But the most interesting thing is here. Now, in 2021, during this zone, right, this is the part where it's very bullish. Everybody is a genius. You toss one stock, the price will just go up. So you realize that even though the value of the company didn't go up, in fact, it's stagnant, no? The price go up. Yeah, because the market was very bullish about anything. Anything that's IT, right? Technology, everybody is bullish. Now, I'm not very sure who bought it here. Now, this must be a lucky guy, because this guy would have bought the Adobe, right, at US 650. 650, huh? Yeah. So right now, I'm not very sure how is he feeling, right? Whether is he still holding on or stock. Now, imagine the person who didn't know about value investing, didn't know something called intrinsic value, and because everybody jumps into it, and then this fella, right, or a few fellas jump in and then bought the stock at 650 US dollars. Yeah. Then when you bought it, and then the share price plunged, you have no idea why it plunged, right? And you have no idea what to do. Yeah. So what should I do? So when it reaches here, you know, it's like the recent tragedy, right? The Ocean Gate submersible. So can you imagine when it reach here? Yeah, you know, the titanium house start to crack. So this is the part where it's about 300 bucks. 300 bucks, huh? So imagine this person take the ride from 650, go down to the base at 300. Wow, this is almost more than 50%. Yeah, for 50%. And then what should this person do? Should I cut loss? So after the person, let's say the person press sell, cut loss, the price go up to 42. Yeah, so if you are a trader, right, it's going to be a tough ride. So at the end of the day, the reason why I want to show you this graph is, remember, right, the job of an investor is to first determine the value first. Yeah, then you look at the price. Should I buy it? Should I don't buy it? So let's look at other people's opinion about how much is this one stock worth. Yeah, and that value, right, is known as intrinsic value. So how much the stock is intrinsically worth. So if the share price is above the intrinsic value, that means it's overpriced. If you buy, it might overpay. Yeah, overpay, huh? Then if the price is below the intrinsic value, right, that means it's called undervalue. You are buying it cheap. So let's look at Morningstar. Morningstar is a professional site, but you have no idea what's the algorithm, what kind of AI, you know, whatever they use. So here, right, Morningstar state that the intrinsic value, is 485. And then as of this afternoon, it's 484. So it's about fair value. It's not very expensive. It's not very cheap. But bear in mind that they put a gray word over here. Uncertainty is very high. So in other words, the price swing can be huge. Huge, right? And it says that this company has a wide moat. Wide moat. That means that the company has a durable competitive advantage. And this guy called Dan, right, Romanoff. Sounds like one character from the Avengers. Romanoff, right? Said that, hey, the Adobe earnings, strong results, uptick in guidance, clearer AI roadmap drive estimates higher. Now remember, we are not sure whether this Dan Romanoff, he himself, does he buy the stock or he just write about it. So remember, Morningstar said that it's fair value. Yeah, fair value. So based on Buffett's definition, if it's fair value, usually it's a buy. Now if you look at Guru Focus, Guru Focus is highly optimistic. So it says that the intrinsic value is 666. So if you look at this 485 and 666, it's a very huge swing, you know, in terms of the intrinsic value. And then Guru Focus opinion is modestly undervalued. So in other words, the intrinsic value is here. This one is 666. And current price is way below. Yeah. So based on Guru Focus, it's a buy because really undervalued. Based on Morningstar, right, fair value is also a buy. Okay, I'm going to share with you my thoughts. Share with you my thoughts. But before I share with you my thoughts, I will need my colleague, right, to put up a poll. Okay, I'll let you decide, right, the poll. So if you look at this picture, as usual, investing is all about risk-reward. You cannot only see the reward without seeing the risk. So there are 3 baskets over here. Let me just write out. First basket is A. Do you think that Adobe, right, if you buy today, is a low-risk, high-return investment? Or B, is a high-risk, low-return investment? Or C, is a high-risk, high-return investment? So you should be able to see the poll at the chat. Now we have 101 people joining us. Now can you just look at the chat, right? You should see something, you know, that pops out. You just help us to press. So yeah, maybe we'll just place that poll for 10 seconds. And then after that, we will release the poll into the chat so that you can use the poll as a reference. But remember, don't go and listen to other people, right? This is just purely for fun. Do you think it's a low risk, high return investment, high risk, low return investment? or high risk, high return investment. Later on, I'll share with you my calculation of intrinsic value. So don't tell you first, so that I don't influence you, right? Alvin says C. Okay. Hey, Alvin, you should be able to see a poll, right? Do you see a poll? It's out already. So you just press, right, the poll. Yeah. So while people are toying with the poll, so what does it mean, right? Charlie Munger, which is a Berkshire vice president, he said that if the instrument, if that company is a high risk, low return, I think you better stay away. No, it's a no-go. Now, if it's a high risk, high return, it's too difficult. Yeah, to him, it's also a no-go. But some people do it, like for example, cryptos, NFTs, and so on. So some people play this game. Yeah, for me, I think I'm too old for this. So for B and C, I think I better stick with what Charlie Munger has said. So B and C to me is a no-go. No-go, So if we want to make money, we want to reduce the chance of losing money, we should all choose A. Choose A. So maybe I let the poll result pop up, right? Okay, good. So now the result is out. 48% high risk, high return. Let me write this here. 48% high risk, high return. 37% is low risk, high return. Okay, very good. 37. And then the last one, high risk, low return, is 14%. Very good. So I think A and C, right, is quite similar. Similar. So remember, I will show you my intrinsic value. Okay, ready? Remember, Morningstar says it's a fair value, so you can buy. Guru Focus says it's undervalued. Wow, you can buy, right? So let me just share with you my thoughts. But before I share with you my thoughts, just to let you know that as investors, we should be risk averse. Risk averse. Instead of putting in all the optimistic in your calculation, right, we should put in all the pessimistic stuff. So what are the things that could possibly happen that could go south? So eventually, I put the optimistic first. Yeah, then see what's the intrinsic value. You see, so I put my opinion, right? My opinion. So my opinion is highly overvalued. Yeah, you don't have to feel angry, right? So remember, I purposely put an optimistic future, where the future growth is 25%. It's unlikely. It's unlikely. But let's assume that it can. That means the next 10 years, you grow at 25%, and then the next 10 years, maybe 2% to cover inflation. And then including a margin of safety. So along this line, right, the intrinsic value is 325. Now, bearing in mind that the current share price is about 400 plus. So even though I'm very optimistic, yeah, it appears to be still overvalued. Overvalued, Now, so let's look at NASDAQ and see what they think, NASDAQ, so if you look at the growth forecast, right, growth forecast of this ratio called PEG ratio. PE, right, stands for price earning growth. Price earning growth, So a company is considered cheap. A fast growth company is considered cheap, provided PEG is less than 1. Less than 1. So if you look at the number over here, 2.92. So no, it's not less than 1. It's not even close to 1. But of course, this is forward PEG. Yeah, forward PEG, right? And if you look at the price to earning ratio, let me just use this as example, 44. By the way, the number by itself, it has no meaning. Yeah, unless you compare to the competitors. So this is a relative valuation. It's not absolute valuation. So absolute valuation, my opinion, is overvalued. Later on, we go back to the graph again. So P equals to 44, right? What does it mean? It simply means that in 1 year, if the company make a profit of $1, today, right, people are paying $44. Yeah, which also means that if you buy Adobe today, it takes about 44 years to break even. Yeah, but remember, right, even though I say my opinion is overvalued, tonight the share price may go up. Tomorrow the share price may go up because price up that goes up and down is pushed by speculators. Yeah, speculators. So let's come back to here, right? Now remember, the peak is about 650. The bottom here, right, is about 300. Yeah, 300, So even if it's the most optimistic, right, the intrinsic value is around here. Around here. So about 325. This is talking about optimistic. So if it's pessimistic, right, it may be just 200. But let's assume that this is the one. So if I draw one line like this, so where's the best entry point, right? The best entry point is during the pandemic. Correct, And then hopefully, but now it's 484, it's really far away from 325. So hopefully there's some bad news, right? And then it drops again, and then it touches the intrinsic value and below. So that maybe would create some opportunity. Yeah. Otherwise, if you buy it here, there is a low upside. Yeah, but there's a high downside. Yeah, so that's my opinion. Yeah, so in case you buy Adobe and then make money, so all the best. But remember, at this point of time, I think it's a bit high, on high side. So let's come back to here, right? So at the end of the day, you realize that as much as we can, Hillary has described to you what it does, and she even go down to the level, right? Or, you click here, type the text, the image will pop out. She described really, really detailed. And all those details that she provided to you, it really takes effort. So remember, investing is not about just hearsay. Yeah, it requires knowledge. It requires knowing what to do. Yeah, and it requires what not to do. And just now I told you what not to do, right? Because in my opinion, I find it's a bit overvalued. And then, of course, the last thing is you want to invest, you need to have a cash. And unless our parents are really rich, our cash is limited. Yeah, you can make money 9 times, or you can speculate 9 times you make money, but the 10th time, yeah, you just make one small mistake, whatever you make will be wiped off. So be very careful, So what I'm going to do is I'll ask my colleague, right, to play a very short video. But before that, let me give you some context. Now, this young gentleman over here, right, his name is called Preston. Preston. I got to know him when he was 19 years old. 19 years old. I think he was still like, studying poly, almost in the last year. And then if you're studying poly, you're last year, right, you don't really have much money to get started, which is why at the bottom here you can see 3K. 3K, and the reason why we want to play this video is because a lot of people their capital size may not be a lot, especially when they're 19 years old. Yeah. So today, right, Preston is 29. So I have known this young gentleman for 10 years already. So in other words, we have always been keeping contact with all our graduates because we meet every single month. And we are the only company in the entire Singapore that does this. We meet our graduate every single month. And right now, we increase the intensity, right, of meeting people is because right now we got all this YouTube Live and so on. So right now, I just want to bring you this journey in case you have a small capital, you have no idea what to do like Preston, right? So that he himself will share with you this wonderful journey. And by the way, right now, his portfolio is $250,000. Yeah, I'm quite sure that right now, $250,000, maybe in the next 5 years, if you compound, he should be able to reach, I think, $1 million, right, before age 40. And that's pretty amazing. Okay, so let's listen to Preston.
I am not living in a paycheck situation. Hi, my name is Preston. I'm 29 this year. I specialize in commercial real estate. So I joined VIA batch 11, if I'm not wrong. I was only, I guess, 19 years old. So I really had no investing knowledge at all.
10 years later.
So how did investing change my life? I guess I am not living in a paycheck situation because value investing gives me the tools and the knowledge to actually have the ability to generate passive income and also to gain additional income through capital appreciation. My goals is actually pretty straightforward. I just want to live a simple, peaceful life, have the freedom of time to do my personal hobbies without the worries of any financial, concerns. When I was starting the time, my mindset was that I thought that, I'll forever be working 9 to 5 in order to meet my financial goals of retirement next time. VIA provides a roadmap for me to actually attain my financial goals. It's definitely worth to invest because if you don't invest, it's almost like the absolute necessity, especially when we're living in a high inflation rate environment right now. The high inflation is actually eating into your value of your money. So I would say investing is an absolute necessity. So when I started the time, my initial capital was about 3,000 to 5,000 USD. Back then, I was only 19 to 20 years old. I just finished my polytechnic and just about to start with my national service. So to be honest, I didn't have a lot of money and to save up a lot of money from my pocket money for my parents and work part-time job as well. 10 years ago, when I started doing with the options, it was only about anywhere between $20 to $50 per month. Was quite little. But of course, over the years, the last 10 years, I reinvested my earnings. I got the dividends as well. And also, naturally, as you progress through life, your work and career, you earn more money. And I put those money that I save into my investments as well. So currently, since last year, I've been earning anywhere between 1,500 to 2,000 per month. And overall, the last 10 years, I have probably invested anywhere between 100 to 120k USD. And currently, my portfolio now is around 250k USD. So why VIA? This is a good question because when I came to the masterclass back then, I find Cayden to be very down-to-earth and sincere. He doesn't really flash, material things, not too showy off, That's why I come to prefer Value Investing Academy. My belief is that you have to start investing in yourself first. You have to equip yourself with the investment knowledge in order to do investments, right? This can be done through attending courses such as the VIA, as well as reading investment books. But then again, I would say studying can only get you so far. At the end of the day, you still have to take that calculated risk by actually taking action, opening the trading account, and of course, buying your first stock or selling your first option, So there's this famous phrase which is called, you can't learn how to swim by reading a book on how to swim, right? You have to really jump into the water and then learn how to swim. I also learned from a lot of mistakes that I've done over the last 10 years. I have made money, but I have lost substantial money as well. Losses have actually taught me good lessons on, portfolio allocation, going through the VIA funnel properly. Yeah, so these all has actually taught me great lessons in investments.
Okay, ladies and gentlemen, welcome back. By the way, thanks to Preston. Just to let you know that Preston is still very active in the community, in a sense that whenever we run our 4-day value investing program, he's back to become a coach. Right now, he's right now a real estate agent, making really quite good commission. And of course, he's one of the very disciplined grad that we have, because for the past 10 years, anybody would have given up. So he kept investing, reinvesting, and so on. By the way, that we're talking about 10 years journey over here. It's not just a 10 weeks and 10 months. People who have quit maybe in the first 3 months, so he keep on doing. So I think from 3K to 250K, of course, he said that in between he inserted in another, I think about 100 plus K. I think it's an amazing journey. So my take is, if I could just do a simple extrapolation, I think before he reached 40, he should be a millionaire. In terms of his portfolio, should be at least 1 million US dollar. And that will be like 1.6 million Sing dollars. That's pretty amazing, huh? Yeah, so please start as early as you can. And before I continue, there was a small little question, right, by Adeline here. So she said that, what if we miss the intrinsic value? So I asked her a question, what do you mean? So now I think she missed, didn't buy, right? So let me just go back to this part now. Yeah, here I didn't buy, right? Or here, I didn't buy. You know what to do? There's nothing much you can do, right? Yeah, so for example, you miss the Great Singapore Sale, your favorite LV bag. You just move on now. You just wait for the next Great Singapore Sale, or you look at another company. Instead of the LV bag, maybe you look at Prada or something else. Yeah, so that's about life, lah. Yeah, but remember, right, I think she also brought up a very good point, is if we do not know whether the company is good or bad, especially when the company is good, if opportunity arises, you won't know what to do. Yeah, you don't even know that the company is good. So that's point number one. The second thing is, if the company is good and you do not know this thing called intrinsic value, and maybe today is really a very cheap price. So in other words, even if the opportunity is being presented in front of you, you wouldn't know what to do. So it's important, right, that we learn something like what Preston is saying. We always want to learn, so that we are equipped with the knowledge, so that when an opportunity comes, we know what to do. Yeah, so this is very important. Yeah, that's why just now I said, right, knowledge, knowing what to do is important. Yeah, knowing what not to do is also important, especially those people who bought Adobe at 600 plus. Yeah, and let me just wrap it up with a very important point. Now, I'm not very sure out of the 95 people who are watching this, how many of you are our grads, how many people are non-grads, right? But just to let you know that if you are our non-grads, you have not attended one of our class, now please be like Preston. Investing is really a necessity. Yeah, 15-year high core inflation, you have to do something. So just to let you know that on the 6th of July, 15th of July, which is on Thursday and a Saturday, we are running an on-site masterclass, because we want to talk to you face-to-face. Like masterclass, So you can see my colleagues have already put the 2 dates. Now, remember what are the things you will learn. Why should anyone, right, sacrifice their time with the family and attend the class. So remember, these are the three things that we're going to cover so that it makes your time worthwhile. First one is you'll learn how to generate not one, not two, but 3 sources of passive income, even if you know absolutely nothing about investing. Yeah, by the way, most people, right, do not know how to invest. Even those people who have an account and then buy stocks, 90% have no idea what they're doing. Yeah, this is as good as gambling. You know, why would people want to do this, right? So sometimes they think that education is expensive. By the way, losing money is even more expensive. So let's be rational and see what makes more sense. The second one is you also learn how to invest with minimal capital. Minimal capital, let me just quantify, is about Sing dollars, $100 per month. Yeah, so this is how we can get started, especially on a low-cost S&P 500 index fund. The next one is, if you are great, you will know CFOS. You learn how to create a cash dispensing machine, like what Preston is doing, so that over time, 1 year, 2 years, 3 years, you know, you can probably replace your existing salary. And just now, Preston was saying about 1,500 to about 2,000. Yeah, so a median salary for a Singaporean, I think, is about 4.3K, which also means that maybe 5 years down the road, if Preston monthly income is about 4K, 4K touches the median income of a regular Singaporean, right? Then practically he doesn't really have to work. Yeah, but he's still young. Most likely he will continue to work. At least lesser stress. Yeah. And the interesting thing is once you sign up, there are 2 links over there. Yeah, you just need to click on the link, right? Yeah, you go to a page and then you select which button that you want. Yeah, which date that you want. So upon registration, and if you appear on site, right? When someone says their PC, when someone says their portfolio, or what does that mean? So maybe I answer one question before I carry on. A portfolio, 250K, Leong asked, right? It simply means that, let's say I'm Preston today. Preston, it simply means that if you log inside his whatever investment account, right? His account will show US 250. 250, But bear in mind that this 250 account may contain stocks which are not liquidated in the form of stocks. It may also contain cash. Yeah, so cash plus stock add together, right, equals to 250K. Yeah, I think this is what Preston meant. Okay, what Preston meant. So let me just come back to here. So after registration, upon appearance on our site, we'll pass you a copy of our notes in case some of you are interested in this thing called Straits Times Index Fund. And then the best part is Warren Buffett, right, has highly recommended any one of us to look for this fund called a low-cost S&P 500 Index Fund. And then we also have some notes. We can pass it to you, how to open an account, how to set up autopilot investing method using gyro, right? As little as Sing dollars, $100 per month. Yeah. So if I could summarize, it looks something like this. Click on the link, and then any of the dates that you select upon appearance, we'll pass you a hard copy. Yep. So this is the first thing. And then after that, you go through 3 hours of class, like what Preston and the 50,000 people across the 11 cities in Asia that have done. And then, in view of your investment of your time, right, at the end of the on-site masterclass, we'll pass you a hard copy of our book, as well as a Starbucks gift card, and inside has a stock value of $10. And the reason why we are giving this is to, how should I say, it's like to brand ourselves. Yeah, to brand ourselves, and also to appreciate your precious time, because no money can ever buy a second of your time. So if I could summarize, now this book, by the way, the foreword is written by Laura Templeton, and Laura Templeton is really a very famous value investor in US, and she said that I highly recommend, okay, my book, that's really nice of her, and the investment courses to anyone who are interested in getting started investing. So this is her, and she kindly, took a photo holding our book. Yeah, by the way, this photo, right, she took it outside her house, and she self-initiated. So in other words, I didn't pay her to do this. Yeah, she really enjoyed a copy of a book. She took a photo, said, Cayden, please use it. So I'm really appreciative to Laura Templeton. So in short, you have the book as well as the $10 Starbucks gift card as long as you sit throughout. And the most exciting thing is, in case you got 1 or 2 very skeptical friends, or maybe your partners or whoever, right? They always worry about investing. Maybe you can bring them. And then if you bring them, your friend will also receive a book and the $10 Starbucks gift card. And then for your effort, to initiate to bring your friend, we'll pass you $20 of NTCU voucher, so that groceries on us, as well as $20 of movie voucher. So your next 2 movies are also on us. Okay. So during the whole process, everybody wins. It's a win-win-win situation. So these are 3 things. So remember, the 2 links are already there. So Leon say thanks, it's okay, thanks for the question, right? So what I'm going to do is, the 2 links is already there. Remember, if you are non-grad, please click on the link, register the necessary information. And if you are grad, you just bring your friends. Yeah, so Preston is really a good role model for all of us. Yeah, so Jason is quite interesting. He said that he went to many investment courses. This is the only one that make money. So I think before we start, let's, now in case you want to know what we do, in short, we use an investing methodology called value investing. And right now with AI, ChatGPT, it's very easy to verify what works and what doesn't. Because with the social media prevalence, everybody say, oh, can get rich quick and so on. If it's so easy, then there will be no poor people along the street. Yeah. So I think learning is very important. Yeah. So you can always use ChatGPT and then ask ChatGPT what is really value investing. Yeah. So you will know that actually the formula has been around for the past 103 years old. So I'm going to end our presentation with one tiny slide. So remember, in case you're watching this and then somehow you didn't see the link, right? Because the link went missing. So remember, you can always go to www.viamasterclass.com. We always update our site. Yeah. So once the class is closed, we always update new dates. Yeah. So if you're watching this, remember, very easy. You can share with your friends. viamasterclass.com. Yeah. And I'll just end with this photo in which I've just taken, right? By the way, just to let you know that we have been running this deep dive series for the past, I think should be coming to 2 years. It has been a very long journey, and serious, long journey, 2 years. And on average, every 1 month, we'll run about 3 deep dive. So in other words, it's 12 times 2, so 24. 24 months times 3, let me see, 4 times 3, 12, 1, right? 2 times 3, 6. Yeah, so we will have done about 72 of these sessions. Yeah, but because it's very hard for you to show what we are doing. So this is our office, this is a 50% office, right? So Susie is our producer. Yeah. So is Irfan very happy? Is he smiling, right? Yeah. So these 2 are our team. So without 2 of them, actually all these things would not have been possible. Yeah, and you already know Hillary. So Hillary is sitting here, and then me, I'm here. Then usually I got a lot of white hair, right? But recently I make it golden so that my white hair is not so apparent. And you realize at SME we are very thrifty. You see, we only got 1 camera. So when I'm talking, the camera will be pointing me. So when Hillary is talking, the camera will be pointing her. So we'll be shifting this. Yeah, so this is how we want to do things, right? Yeah, to keep everything as efficient as possible. Just like running a business, we want to keep the expense low as possible. And then we also want to deliver great value. Yep, so I would like to thank the team, the 3 of them who has been with us for the past 2 years so that we can deliver this. So remember, the link is really there. If you are not our graduate, please click on the link, register. If you are already a graduate, that's fine. Just share the link, share these YouTube videos with all your friends so that, how should I say, you will know actually all the members over here, right, as part of VIA Value Investing Academy, we truly care to make all of you a better investor. So with that, ladies and gentlemen, have a good rest. So remember, I look forward to seeing you in our next any one of the dates at Masterclass. Yeah. So see you soon in our next round. Goodbye.